I have a two-part question. First part, very short. I think a lot of people have difficulty valuing businesses because of some convoluted accounting schemes that are out there. Do you have any suggestions in terms of books or something you can read where you can sort of make sense of some of the accounting stories that are going around?
Well, that's a good question. And Abe Brilloff used to write for Barron's quite frequently on various accounting machinations, and Barron's has continued that somewhat. But you're right that there are people out there who will try to paint pictures with accounting that are something far from economic reality, and sometimes the rules of accounting themselves lead to that. I would say that when the accounting confuses you, I would just tend to forget about it as a company. I mean, it may well be intentional, and in any event, you don't want to go near it. We have never had any great investment results from companies whose accounting we regarded as suspect. I can't think of one. Can you, Charlie?
No.
It's a very bad sign.
I made a short sale once that worked out well in a case like that.
It really, accounting can offer you a lot of insight into the character of management. And I would say there's a lot, you run into a fair amount of bad accounting. I used to call it creative accounting, but and you probably run into a lot more if it was allowed. But some companies have been able to push their auditors pretty far, and I would be very skeptical of anything that looks suspicious to you. I think there have been a couple of things written, but I can't think of where they've appeared, where people talk about the questions of what. Obviously, if some prepaid expense, deferred asset accounts start building up suspiciously high, and inventories look out of line, with sales and particularly the trend of them and all that, you want to look twice at companies like that. Life insurance, frequently, we see weak accounting in it. You can, when you don't have a product where revenues and expenses are being matched up on something close to cash in the short term, you have the opportunity for people playing games with numbers. And some people have learned how to do that very well, and they've sometimes created long-lasting stock manipulation or promotion schemes that have enriched themselves where they've enriched the managers or the creators of it at the expense of the public over time. If you ever get suspicious about accounting, just go on to the next company.
Hello, my name is Peter Bevelin from Sweden. What is the absolutely first question you ask yourself when you look at a potential investment? And do you and Mr. Munger ask yourself the same first question?
Yeah. Well, I think I don't ask myself whether Charlie's going to like it, because that will be a tough one. No, the first question is, can I understand it? And unless it's going to be in a business that I think I can understand, there's no sense looking at it. There's no sense kidding myself into thinking that I'm going to understand some software company or some biotech company or something of the sort. What the hell am I going to know about it? I mean, I can. So that's the first threshold question. And then the second question is, does it look like it has good economics? Has it earned high returns on capital? Does it strike me as something that's likely to do that? And then I sort of go from there. How about you, Charlie?
Yeah, we tend to judge by the past record. By and large, if the thing has a lousy past record and a bright future, we're going to miss the opportunity.
Zone 2.
Hi, this is Keith. I'm Keith Breyer from San Francisco. I have a question. When you're valuing the companies and you discount back the future earnings you talked about, how many years out do you generally go? And if you don't go out a general number of years, how do you arrive at that time period?
Well, that's a very good question, and it's the heart of investing or buying businesses, which we regard as the same thing. And it is the framework in which we operate. I mean, we are trying to look at businesses in terms of what kind of cash can they produce if we're buying all of them, or will they produce if we're buying part of them? And there's a difference. And then at what discount rate do we bring it back? And then I think your question was how far out do we look and all that. Despite the fact that we can define that in a very kind of simple and direct equation, you know, we've never actually sat down and written out a set of numbers that to relate that equation. We do it in our heads in a way, obviously. I mean, that's what it's all about. But there is no piece of paper, and there never was a piece of paper that shows what our calculation on Helzberg's or See's Candy or the Buffalo News was in that respect. So it would be attaching a little more scientific quality to our analysis than there really is if I gave you some gobbledygook about, well, we do it for 18 years and stick a terminal value on and do all of this. We are sitting in the office thinking about that question with each business or each investment, and we have discount rates in a general way in mind, but we really like the decision to be obvious enough to us that it doesn't require making a detailed calculation, and it's the framework, but it's not applied in the sense that we actually fill in all the variables. Is that a fair way of stating it, Charlie?
Yeah, Berkshire is being run the way Thomas Hunt Morgan, the great Nobel laureate, ran the biology department at Caltech. He banned the Frieden calculator, which was the computer of that era. And people said, how can you do this? Every place else in Caltech, we have Frieden calculators going everywhere. And he said, well, we're picking up these great nuggets of gold just by organized common sense, and resources are short, and we're not going to resort to any damn placer mining as long as we can pick up these major aggregations of gold. That's the way Berkshire works, and I hope the placer mining era will never come. Somebody once subpoenaed our staffing papers on some acquisition, and of course, not only did we not have any staffing papers, we didn't have any staff.
Zone 2.
Larry Myers from Omaha. Warren, two quick questions. The first one very brief. Do you have any timetable regarding when you will write your own book about your career in philosophy?
Yes, my timetable has always been 6 months from now. Now, the answer on that is I've thought about doing it a few times, and I think about it. It always seems to me there are more interesting things yet to happen than have happened so far, and I don't want to. I know I won't write a second one, so I keep postponing it. That's my rationale on it anyway.
I have had great difficulty enabling my children to know what I know. And Warren, maybe you have failed less.
My children in many ways are a lot smarter than I am, so I had a different experience, Charlie. No, I think you can, I've mainly learned by reading myself, so I don't think I have any original ideas that but I've certainly got a lot. I mean, I've talked about reading Graham. I read Phil Fisher, and I've gotten a lot of ideas myself from reading, and in my own case, I mean, talk about your parents having influence. My parents had enormous influence, so I think you can learn a lot from other people. In fact, I think if you learn reasonably well from other people, you don't have to get any new ideas or do much on your own. You can just apply the best of what you see.
Generally speaking, I think we always get a group of wise people after sifting millions, but I don't think anybody's invented a way to teach so that everybody is wise. It's extraordinary how resistant some people are to learning anything.
Well, and really, what it's astounding is how resistant they are when it's in their self-interest to learn. I mean, I was always astounded by how much attention was paid to Graham. I mean, he was regarded 40 years ago as the dean of security analysts, but how little attention was paid in terms of the principles he taught. And it wasn't because people were refuting them, and it wasn't because people didn't have a self-interest in learning sound investment principles. It was just this incredible resistance to thinking or change. I mean, I quoted Bertrand Russell one time as saying, who said that most men would rather die than think. Many have, and in the financial sense, that's very true. It's not complicated. I mean, human relations, usually aren't that complicated, and certainly it's in people's self-interest to develop habits that work well in human relations, but an amazing number of people seem to mess it up one way or another.
How much has Berkshire Hathaway been copied either in investing America or corporate America? I'm not saying we deserve to be necessarily, but people don't want to do it differently than they're presently doing it.
You might argue that Mrs. B, having started what you may have seen out there this weekend with $500 in 1937, without a day in school in her life, and building that into a great enterprise, you might say, well, that is something to study. I mean, is it because she couldn't speak English when we got, she got over here? Maybe we cleansed people. I mean, what is there to learn from seeing somebody create an incredible success like that in a competitive business? She didn't invent something that the world had never seen before. She didn't have a lock on some piece of real estate that protected her from competition. All of these, and yet she accomplished something that virtually no one has accomplished. Now, why aren't business schools studying her? Why are they talking about EVA, economic value added, as we talked about earlier? Any of the, I mean, here is a success. Something has made her a success. Is it something? Is it a 200? She's very smart, but is it a 220 IQ? No, it isn't. It's a very smart woman, but it's not. It's not something that's incapable of being replicated in the habits and the way of thinking. But who is studying her? I mean, they present her as a curiosity, but if you go to any of the top 20 business schools, there's not one page that's being given to anybody to study what is an incredible success. And I find that very interesting. That and to some extent, I've seen it in the investment world. There's this. For one thing, it's probably a little discouraging to a professor of management at some major business school who's gone on to get his doctorate and everything to think he has to come out and hang around the furniture market and study a woman in a golf cart. I mean, but they'd be better off if they did. Where were we on that? What zone are we on? 4, are we? Wherever it is, zone 3 maybe, huh?
Yes, thank you. I'm Jim Ludke from Phoenix, Arizona, and I haven't been to one of your annual meetings for about 10 years now. The last one was down at the Red Lion Inn by the water, and I congratulate you on your popularity. I wish I'd bought more stock then. But like Charlie, I too have been giving mine away for charitable purposes, so your beneficial effects have reciprocated and rippled throughout the economy. I congratulate you.
No, I congratulate you.
What do you think has changed? Well, one thing is that Ben Graham, commenting on what you just said, I'm a student of Ben Graham, and he said it never ceased to amaze him how widely read he was and least followed. But how have you changed in the last 10 years? I mean, much, if any, or none at all, or...
Well, we'll let Charlie. He's been watching me.
I'd say about 1 stone. Takes one to know one.
Yeah. If we'd wanted to change, we would have changed a long time ago. I mean, I've never believed much in this theory of, if I have X, 2X instead of X, then I'm going to do this or that, and or I'll take this job I don't like now and I'll get one I like later on. Or it doesn't make much sense to me. I mean, there aren't that many years around, so you ought to be doing what you like at the present time. And Charlie and I have always followed that pretty well.